This is the Norris Group's Real Estate Investor Radio Show, the award-winning show dedicated to thought leaders shaping the real estate industry and local experts revealing their insider tips to succeed in an ever-changing real estate market. Hosted by author, investor, and hard money lender, Bruce Norris.
Hi, thanks for joining us. My name is Bruce Norris, and today we have a very special guest, Marck de Lautour. Marck is founder and CEO of SBD Housing Solutions, a real estate investment firm based in Kansas City, Missouri. He has been investing in real estate since 2002 and has successfully flipped over 1,800 homes in the United States. His property management firm now manages 650 rental homes. Marck's investment firm specializes in delivering quality rental investment opportunities to passive investors looking to deploy their capital outside of the stock market into alternative investments. The SBD team's mission is to help investors deploy $1 billion into real estate by 2030. He also loves to invest in multifamily apartment complexes and has successfully raised over $10 million to deploy into assets throughout the Midwest. And we're going to cover in this interview some of the things that he has implemented to help his clients. So, Marck, welcome.
Thank you, Bruce. Appreciate you being here.
I'm going to start just by asking, you were born in New Zealand. What did your dad do for work? I'm just curious.
Yeah, my father was actually an airline pilot. He flew the large 747 jumbo jets, and so was one of those unusual people that actually held the same job for 42 years. He just slowly grew up in the airline industry in New Zealand. There was a pilot shortage back in the 60s or late 60s, early 70s. And so he jumped on that, just had a passion for aviation. And so the thing that inspires me most about my father is that he truly just lived into his passion and just continued to do it and never wanted to do anything else. Once he got on the 747, he said, "Hey, it's the cream of the crop. And, there's no going up from here." So he continued and stayed on that jet for about 20 years.
When you were growing up as a kid, did you notice yourself having an entrepreneurial bent of some kind?
My parents really valued education. I actually went to a private boarding school in New Zealand where I think that's where my leadership traits were developed. The prefect system, the house system. I think most people in America would probably relate it to something you see like on Harry Potter, but it was an interesting time. So at the age of 13 years old, I went to a boarding school, came home just every other weekend and spent a ton of time, kind of being charged with the responsibility of running the school, my junior and senior year. And they really encouraged leadership. And that's something that I think I'm a second born, I'm a middle child. I don't know if you've read Dr. Kevin Leman's book, The Birth Order book, but the second born is typically extremely, motivated, aggressive, wanting to hard charge, prove themselves. And that certainly rings true. I was always just trying to keep up with my older brother. Yeah,
I'm a middle child too, with the same mentor, if you will. My brother, I was like, I'm never going to catch up to that guy.
Yeah.
So you ended up in the United States, and what was the process that got you here?
Yeah, I was a fairly decent tennis player that attracted some attention from some of the universities. Blessed to be able to get a scholarship to University of Missouri here in Kansas City, and so played for 4 years on the tennis circuit here for NCAA. And they got my undergrad and stayed on as a grad assistant. Got my MBA. So from there. It was my degree was in business and then international business management. I often kind of quip, that I don't really use my degree at all because I got straight into real estate. But having said that, it was such a great base, such a great education to go in and understand how business works at a pretty young age. But I was one of those few that got on that accelerated executive MBA program. So I came out at a very young age with an MBA. I think I'd go back now and look at those classes very differently, Bruce. But at the time, I knew I wouldn't go back. I just wanted to get it out of the way. So I just knocked it all out in 5 years.
Who around you was into real estate? How did you get into that?
My uncle, I think I would credit, he just gave me the book Rich Dad, Poor Dad, which I know is clichéic now because just so many people were inspired by that book, but that was back in the year 2000. And I read the book and it just kind of spoke to me. My father had introduced me to the stock market. And it was like watching paint dry, especially on the, the New Zealand Stock Exchange, for crying out loud. I mean, there's just so little movement. Wasn't really appealing to me, but real estate I could understand. And there was a couple of people, obviously going to a private boarding school. It's like the #1 school in New Zealand. And my parents, obviously sacrificed to put me through that school. But a lot of my best friends' parents were like in the top 10 rich list in New Zealand. We were kind of middle upper, family, but, hanging around with parents of my best friends that were just, multi-millionaires. And it, for a young kid, you're influenced by that. It's aspirational. And, they were not arrogant people. They were great people, and they're just so giving and of their time. And a lot of the dads were in real estate in some form or fashion. So I think, coupled with the reading that I was doing at the time, I think that's probably where I had piqued my interest.
How old were you when you got married?
I married young. For perspective, I got married in 2001, so I was 24 years old. Just celebrated our 21st wedding anniversary is today. So
congratulations. That's
thank you.
That's very cool. So your entrance into real estate and your getting married is very closely tied. Yes.
Yeah, I had a very supportive wife. It was it's kind of a funny story, Bruce. There's a couple of instances in my life where I've asked for forgiveness, not permission. And I went along to I answered a newspaper clipping. That's how old I am, Bruce. I'm newspaper. But there was a newspaper clipping that said, "Come learn how to buy foreclosures on the courthouse steps." And so I went along, and obviously it was an upsell. So it was a free seminar. Then they pitched you on the $5,000 course down in Springfield, Missouri, a guy that I don't think he's no longer in business, but he was educating in that space. And I mean, gosh, he taught me how to, research trustees' deeds, how to literally go to the recorder of deeds office and pull up the microfiche and understand how to, basically do a title search effectively is what I was doing, because title was so inefficient. They couldn't get it done in time. And so I learned how to kind of research title, understand if something was clear, and, research if something was in a first or second lien position. And so came back home to my wife and said, "Hey, I spent $5,000 on a credit card, money that we didn't have at the time." And but she was, at least supportive enough to say, if that's what you want to do, then make sure it counts.
Yeah, that's an amazing wife. There was a story that I heard you tell about the Florida house that you bought, and without her knowing about it. So I'm just going to tell you, we are of the same ilk. I was teaching Bible class, and I decided to put the women on one side and the men on the other side, and ask them this question: what would your reaction to be if you came home and there was a new car in the driveway that you didn't know was being bought? And my wife was in the class. He says, "You gotta be kidding. I come home every day and he buys a house."
Yeah, there's a lot of that goes on in our household, but yeah, we've been blessed.
Well, at that time, $5,000. I mean, what was in your mind to say, yeah, that's a good idea? Because that's a big.
I saw my friends, graduating from university, going to KPMG and Sprint and Hallmark Cards, Ford, Cerner Corporation, these big corporations in Kansas City. And I didn't get I just didn't see myself sitting behind a desk answering to someone else. Didn't really know what that meant, because, I was very young and didn't understand what being a business owner meant. I just knew that wasn't for me. So the thought of kind of rolling up your sleeves, buying a deal, rolling the dice and seeing if you could flip a house, had some kind of appeal to me. And yeah, it was, I mean, I'm not minimizing it. It was a massive amount of money that, we had to work on paying back. But I just value education. I think one of the things that I was taught at a young age is the value of good education. And I certainly knew that I didn't want to go in and make all the mistakes in real estate without getting some kind of education first. And I think if there are people out there that are listening, how do I get into real estate? The one thing I would tell them is, if you've got less than, $20,000 in the account, first go and invest in some kind of education. There's so much online training or YouTube courses or, small investments now from real estate educators. Go learn first before you go throw the big bucks at an investment strategy. That certainly paid dividends for me.
Well, when you bought your first property, it wasn't connected to the trustee sale. So let's talk about that one first, and then then I'll follow up with some questions about doing actually the trustee sale business.
Yeah, I was fortunate with it. I was going to church with a guy who was a new home, just got a new home construction, and they took a house in on trade and said, "Hey, we want to get rid of this. We're not in the business of flipping, but it needs some work." It's happened to be a Japanese owner that just didn't want anyone to go through the house. So, one of those many instances that people that do off market deals would understand, where there are some people just don't want their house on the MLS, and so. I had to kind of take it sight unseen, but I obviously had pictures. And so, bought the house, drastically under market value. And at that time, rolled my sleeves up, kind of got stuck in and was able to flip the house and kind of make, at 25 grand, which at the time was, equivalent to, basically 9 months of a salary of what my friends were making, sitting behind a desk. So I thought, man, if I can do that, maybe I can repeat it.
Maybe I can take $5 grand of that and pay for this course.
Yeah, at that point, I'm out of the doghouse and I was able to go on.
People that maybe haven't been in the trustee sale buying business, that's a very unique place to start, because what you just said is front loaded with education and also work. So you have to check out all these properties. You're doing the title search for all these properties. Then you have to physically go see the houses. The odds of you getting into those houses are not high, right?
High risk, high reward, indeed. Yeah, I mean, for those that are unaware, these are houses at the trustee sale that technically, until the hammer falls, are still owned by the actual occupant. So very respectfully, you have to knock on the door. Oftentimes that would result in a "get the F off my lawn" type response. Which is always humorous when you end up buying the house, because they're, like an ostrich, their head's buried in the sand. And then you say, "Hey, would you please now get out of my house because I own it?" But essentially it was, an adventure. It was a chase. Every day you would wake up. It's a great inefficiency in the business model, because back in the day, Bruce, they would announce the opening bid for sale sometimes the morning of the sale.
Oh, absolutely.
And so, we would be on constant alert, where if the mortgage, it didn't matter what the mortgage was. The mortgage could have been $100,000 on a $140,000 house. Well, that wasn't enough spread for me, but suddenly the opening bid comes in at 20,000. Right. And oh my gosh, I got to run to the house because now it's a deal. So run to the house, check it out, knock on the door, look in the windows, try and get some information. Does the foundation look good? How's the AC? Give you an indication of the furnace. And then you run to quickly get back to the courthouse to get there in time when the hammer falls and no one else is there. You get it for $20,000. I mean, the rips were unbelievable.
Well, but the dry runs were many.
Oh, of course. Yeah. I mean, for every, 20 houses you drive by, maybe get one or two.
Exactly.
So then it was a matter of trying to put some systems and process around that. What I saw was a massive opening, because obviously I did this in theoretical sense for a couple of weeks before I said, man, this is really going to work. So I would run to the house, check it out, and then go to the courthouse steps, and there'd be one or two guys there. I mean, it was just, no one was doing this. And so I saw a massive opportunity and a big opening in that space. Now, obviously at the same time, turned around and got my license. So I, was at least kind of dabbling in the real estate space, looking for MLS deals as well. But I soon learned that there was a massive opening and just committed to it. I have always been the guy that when I see an opportunity, I tend to go a mile deep rather than a mile wide. So I said, okay, hey, look, I can make money in this. If I become the expert and the biggest buyer of the courthouse steps in our county, then I'll be able to, I'll try and dominate that space. And so I put systems and process in place, hired my first VA to start doing all of the tedious work of, checking out title and, running searches and checking on opening bids and putting together spreadsheets of the upcoming opportunities, so that I could do the work that took a little bit more skill, which was knocking on the doors, talking to people, seeing if the home was occupied or vacant, and making the decision of a go, no go.
Yeah, that's great. Now, were you adept at repairs?
Not at all. No, I did one house, I think pseudo myself, obviously, outsourced the carpet and the roof and those kind of things. But, I'd paint a house myself. Quickly learned, I'm like, look, let me go, when you make, your first 25K and you're like, look, I could have paid someone else to do the work and still made good margin. I think there's just a highest and best use of talent. And I quickly found that was not mine. So I like to say that I don't want to rob the the guy that finds joy in mowing lawns by doing it myself. So I'll try and outsource as much as possible.
Yeah, absolutely agree. Have you set up a system to where are you still buying at trustee sales, first of all?
That's a really good question. Unfortunately, foreclosures dried up. As you know, we just haven't seen many. And auction.com, I'm sure you're familiar with the company, had a massive impact on my business model. In 2015, they kind of came around. And by 2017, they were providing up-to-date financials and actually fake financials on their website on a frequent and updated basis. So before, where I was logging into Millsap and Singer or Shapiro and Wiseman or South and Associates websites to actually get the data myself, now they were doing that, throwing it up onto a website, advertising the heck out of it, and doing fake opening bids. So they would advertise just to try and generate people to come to the sale. So they would have a $200,000 home where they would set the opening bid at $26,000. Of course, when you bid $26,000 and a penny, they would then say, oh, having heard a third-party interest, we now raise the bid from Wells Fargo Bank up to $175,000. So, but what they were doing was generating a ton of interest in that space on the courthouse steps. And so now, I mean, goodness, the competition is just like what you would see in San Diego or LA or Phoenix, where you have, 20 to 30, ready, willing, and able buyers with cash on the barrelhead, as they say, to pull the trigger on any day. So it really ruined that business model, which was not a forever thing anyway. But luckily, I pivoted and joined a mastermind group, Collective Genius, which you are familiar with. And I was able to use my collaboration and partnerships and friendships through that group to allow me to pivot and go find off-market deals without the reliance of the courthouse steps auctions.
You'll appreciate that we interviewed the owner of that company, auction.com.
Okay.
And shoot him out on air for the false overbids that they were doing at these auctions.
I appreciate you even more, Bert. Yeah, it was quite interesting times. Frustrating. You can imagine. I'm like running around town trying to do this, get to the house, because you see a $26,000 opening bid, you get at auction, and then they raise. It wasn't even a true bid. The bank was already willing to pay $100,000 more than that, and so it got to be completely frustrating.
I didn't like that they were bidding all of those bids. Were shill bids. There weren't other bidders, and I just said, what you're teaching me now. They not only took over the trustee sale business, but the auction of REOs. And so I said, I'm one of the few people that will go see all 400 houses, and I sit in that audience waiting for some of those to drop through the cracks because I did more work than anybody. And you're not letting that happen. You're going to dumb down your audience. You're going to get rid of the me's in your audience. And that's what you're doing, just so you know. So anyway. You and I,
we have similarities there. I mean, literally, I would hustle and grind and look. I would just never, even the random attorneys that would not, advertise on through the mainstream newspapers. We would find all the attorneys. We were just hyper detailed and would never let an opportunity go. We did look at hundreds and hundreds of opportunities to find the ones. And you're right. I just got to the point of frustration where I finally walked away and said, enough's enough. I'll go. So in 2017, I think it was the last year where we bought over 100 homes. And in 2018, I think we bought maybe 30. And then now we don't buy, we were down to zero, quite literally.
You're not buying right? Well, no, not at courthouse steps, but you're doing it
the courthouse steps. Yeah. So the courthouse steps, we used to buy over 100 a year, and now we're buying zero on the courthouse steps and still buying a couple of hundred houses just off market.
Yeah. Well, that's what's unique about the business, is that, see, that's what I use charts as well, just so you know. So charts tell me when I go out the door, what activity should I be doing as a buyer? How do I find deals? I'll take a look at a chart and say, okay, it's not time to pursue trustee sales. It's a time to do mailers or time to do land or whatever. So it's that's great that you've morphed your business to a more sustainable model.
Okay, that's going to do it for this week's episode of the Norris Group Real Estate Radio Show and Podcast. Please stay tuned next week for part 2 of our interview with Marck de Lautour.
For more information on hard money loans and upcoming events with the Norris Group, check out thenorrisgroup.com. For information on passive investing with trust deeds, visit tngtrustdeeds.com.
The Norris Group originates and services loans in California and Florida under California DRE License 012-19911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.